Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Chuani. Good evening. Today is August 25th, Monday. I want to apologize to everyone, I'm sorry, because when I was transferring my files to the computer, the computer suddenly crashed and then shut down. So for now, today we'll be using Bloomberg to do the live broadcast. Alright, our topic remains the same. At the moment, it looks like the impact of tariffs and interest rates on the US stock market has temporarily come to an end, so now the focus is shifting to economic performance going forward. So right now, actually the biggest topic this week is Thursday. In Taiwan, it's the early morning on Thursday when Nvidia's earnings report will be released. Before that, there will be some economic data. First of all, here are this week's economic data. For example, today we'll have the Chicago Fed National Activity Index and new home sales, and also the Dallas Fed Manufacturing Outlook. Among these, the last 2 are relatively more important. Next, on the 26th, we'll have the durable goods orders and core capital goods orders. Also on the 26th, there will be some regional manufacturing indices. But actually, the most important on the 26th is the Conference Board's Consumer Confidence Index. Next, on the 28th, there will be the second release of the GDP data, but actually the most important is still on the 29th, when we'll have the personal income, personal spending, and PCE data. So, for now, this week's economic data. So, the key economic data this week are the Conference Board Consumer Confidence on the 26th and the personal income, personal spending, and PCE on the 29th, which are relatively more important. As for earnings reports, Nvidia's results are definitely going to be significant, and actually, for Nvidia, the outlook should be quite positive. Right now, everyone has pretty high expectations for Nvidia. So let's take a look at just how high those expectations really are. To what extent are people expecting from Nvidia this time? Right now, you can see that in Nvidia's Q2 of fiscal year 2026, there is actually quite significant growth across the board. Let's take a look at another aspect. Next, you can see that for Nvidia's Q2 forecast, it's expected to perform quite well, with earnings projected to grow by more than 53%. So, revenue is expected to grow by nearly 50%, operating profit is also up by about 50 to 60%, and finally, net profit is similar, at around 40%. EPS is also expected to grow by 30 to 40%, so that's the general consensus. If we look at the highest estimates, as of this afternoon, the year-over-year growth could reach 60 to 70%. From what we can see right now, Nvidia is performing quite well. Currently, Nvidia is focusing on 2 main areas. One is that it is now. There are GB200S, and even higher-end GPUs are shipping more smoothly and in greater quantities. This was the news released on the 22nd, which basically says that, as we all know, in this midline construction, there are 2 forms, scale out and scale up. Now, what they're working on is scale across. So actually, this is the 3rd type of scaling. What this means is that they want to. It could be small data centers scattered in different locations, and they connect them together to form a large data center. That's the current solution they're proposing. So, in this case, it's a kind of cross-scale approach. From this, you can see that they're combining distributed data centers into a large AI factory. This kind of setup can actually span across cities, countries, and even continents. So, as it stands now, in terms of AI development, although last week we saw that the stock prices of various AI companies dropped sharply on Monday and Tuesday due to concerns about valuations, right now AI is actually splitting into 2 directions. One is AI applications. Then there's AI infrastructure. As for AI applications, last time we saw reports saying that 95% of AI investments currently haven't yielded results. Right now, the whole field of AI applications is still in a very early stage, because AI is something that takes decades to be fully adopted. So, when it comes to applications, everyone is still in the initial phase of experimentation, so for many applications, it seems like there won't be any returns for now. Everyone is still going through a process of trial and error, trying to find viable paths for practical use. So, when it comes to AI applications and end-user products, something that's been really popular lately is the AI agent. You can actually think of an AI agent as similar to how, back in the early days of smartphones, everyone talked about apps. There are a lot of them. Back then, companies would launch an app, and just by releasing an app, they could become a new company, raise a lot of funds, and get really high valuations. That was the era of apps. Now, it's the same situation with AI agents. Right now, AI agent is a trendy buzzword. But in the end, it will just become a generic term. In the future, companies or enterprises will more or less have AI agents, and these AI agents will be integrated into existing things. It's not like I just train a large model to create an AI agent, and then the AI agent can work perfectly on its own. To meet my needs, in the future, AI applications in various fields will gradually mature at a slow pace, integrating with existing technologies. So, the development of AI agents is still at a relatively early stage right now, and after a round of shakeout, there will be real winners. But actually, at this point, I don't see any clear victors yet. What we do know is that the more obvious winners right now are the tech companies investing in this, because their profit margins are relatively broad, and their technology or resources are comparatively solid. On the other hand, in the AI field right now, inference is still better than browsers, and when it comes to hardware, it's mainly foundational providers like NVIDIA taking the lead. Here, when we talk about hardware, we're not including companies like Nephos or CoreWave. Because right now, for these companies, only if AI does really well will they actually perform well. Like, if I have AI announced and running, then these data centers will benefit. So what we're talking about here is this kind of AI. We're talking about the infrastructure, like companies that sell chips, companies that sell servers, and companies that sell optical communication equipment. For servers, that also includes their components. That's the current situation. Next, we can discuss this further. We'll come back to this topic and discuss it again in a bit. Next, let's first talk about some other recent developments. For example, last week regarding interest rates, Powell's main speech was actually quite balanced, presenting both pros and cons. The key takeaway from his speech was that he is considering the possibility of cutting interest rates. The market actually interpreted this as positive news, which means that right now there is a force, or rather a relatively strong force, supporting the market. But in the end, will things really turn out this way? Or how will these expectations play out? That's something we'll have to keep watching. Next, let's talk about tariffs. We can see that the impact of tariffs hasn't really shown up yet, but looking ahead to the fourth quarter, things might change. Inflation should be relatively high, but for now, everyone, or at least the Fed, expects that these tariffs might be a one-time thing. Actually, it's pretty hard to judge, because the real impact of the tariffs hasn't really materialized yet. As for the full list, since it keeps getting postponed and delayed, the impact keeps getting pushed back as well. So right now, it's basically like this. We can see that in the market, the Fed might be able to cut interest rates, there's room and there's a possibility for that. Now, the current focus is more on the job market, while inflation might rise in the fourth quarter of this year, and it's very likely that it will go up. But for now, since this increase might be interpreted as a one-time effect, people are generally choosing to overlook it at the moment. As for the overall market situation, at least until maybe September or October, and even until the end of the year, we can see that the US stock market will likely remain relatively volatile, but still in a bull market uptrend cycle. However, during this process, any pullbacks are actually good opportunities to position yourself or consider the right timing. Because right now, we can see that all parties are working hard to support the market, speaking of the US in particular. We can see that starting in July, the US government managed its finances through the Big American Bill, and next, it began to target the Fed, putting pressure on the Fed. They're listening to what he says, and now it looks like the rate cuts are starting to have some effect, which is why they're willing to consider cutting rates. Although there are still some uncertainties, we'll just have to wait and see. Basically, it should play out this way. The main questions are how much they'll cut and when. Next up is, as for the data, you can see that after the poor performance in the relevant agricultural sector, they replaced the head of the Statistics Bureau. So, in other words, they are taking very proactive measures in terms of both monetary policy and data. Recently, we saw some news about Intel, specifically, the US government taking a stake in Intel %. So what does this mean? Basically, it shows that right now, the US. Yes, that's right. Now it's about looking at Huawei's financial report. The US is trying to imitate China now, state capitalism. They're testing if this approach can work, starting with Intel. It's not Intel. When they took a stake in MP Materials, it was the same situation. In other words, what they're doing now is using the state to support these companies. And this approach, actually, will have a lot of unpredictable consequences. What we always say is that in the capital market, the most important things are private property rights and the rule of law. These are the cornerstones of how the market operates. There are a lot of things I can overlook, but these two bottom lines absolutely have to be upheld. So actually, if that's the case, the rule of law has already shown some signs of being undermined under the Trump administration. This is something we can see from a political article, which talks about how foreign diplomats are actually starting to feel concerned about the United States. The reason for this comes from issues within the US itself, like immigration, drug abuse, and some of these kinds of problems. In these practices, the approach is relatively direct, and correspondingly, it lacks a legal basis. People are starting to worry that if you handle internal affairs like this, and the rule of law is already being eroded, then what happens when it comes to foreign affairs or other areas? When it comes to international cooperation on issues like public security, counterterrorism, or intelligence sharing, there are concerns about whether you can be trusted. In fact, some European countries are already expressing these worries. The current topic is that the American legal system is gradually being undermined. It's not that it's already completely destroyed, but rather that there are signs of erosion. Next, if the government starts taking shares in companies, meaning a company becomes more public, less private, then the distinction between public and private companies becomes less clear. The ownership of such major powers might become harder to define. And that's the current topic. We can see signs of both of these issues emerging. Looking at the bigger picture, right now, the reality is that the US, at least until the end of this year, the entire market will continue to show this trend. The government is fully supporting the market in every possible way, as we just mentioned, through fiscal and monetary policies, data, and interest rates. Next, the state itself is really stepping in, directly supporting these companies. So this is what's happening. But how long can the government keep supporting the market and the economy? That's also why our title says that, at present, tariffs seem to have limited impact. You can see that the EU has started to have more in-depth discussions with the US, saying that maybe we will. Maybe these tariffs can be lowered. Everyone seems to be reaching some more moderate measures. Today, we also saw that Canada has given up its retaliatory tariffs against the US, so at the moment, the news about tariffs is no longer the main issue. The key point now is whether tariffs can actually impact inflation. Whether this effect is one-off or lasting, these are things we'll need to observe for a while before we can really tell. Next up is interest rates. There's nothing particularly good about them either, but we still have more to talk about, namely, the Russia-Ukraine issue. Recently, that's been a focal point, because there are three parties involved in discussions: the US, Russia, and Ukraine. The US mainly wants to push for peace, and on the Ukrainian side, the military has spent a lot of resources hoping to get some returns. At this point, the US is becoming more and more focused on its own interests. Basically, if I help Ukraine, what benefits do I get in return, or what concrete results can I actually see? It's not just about saying goodbye, because using some stock market value to help Ukraine, that's the US. As for Ukraine, as for Russia, Russia has actually achieved some results, but it's also been severely weakened, so it doesn't really want to keep fighting. It just wants to lock in its gains, so maybe. In eastern Ukraine, Russia wants the land it has already occupied to be recognized as its own, and for Ukraine not to join NATO, along with some related security guarantees. So, moving forward, the one who's actually in a tough spot right now is Zelensky, because at the moment, he really wants to hold out and keep fighting. That's understandable, because as the current president of Ukraine, if he were to seek peace now, surrender, or cede these territories to Russia, he would go down in history with a terrible reputation. People would say, "Oh, it was during your presidency that this happened. You ended this war without letting us resist to the end." So this blame would fall on him, which is an understandable reason why he doesn't want to stop the war. But another reason is he really on this side? If people keep dying in the war, then the president can keep fighting. And after that, there are actually a lot of war-related interests, like financial aid will keep coming in, and Russia, the money will flow into Ukraine. Actually, those in power in Ukraine will benefit from this, so maybe they might actually be benefiting from the continuation of this war. But right now, the ones making the biggest sacrifices are the Ukrainian people. As for Ukraine now, it's actually, I think this will become the main event in the market, but it could also combine with other events and turn into a black swan. But if this thing doesn't end, Alright, so for now, these are the current tariff rates and the state of the economy. Next, we can discuss some related aspects of US politics. Right now, we know that Trump is becoming more and more aggressive. This isn't something that just happened overnight. Right now, the US has two types of responses. One is moving towards socialism, and the other is following Trump's approach. Let's take a look at what it means to follow Trump. Currently, we can see that this person here is the governor of California, and he is currently in the polls. He represents the Democratic Party, the one who stands against Trump. So, what about him? Right now, in California, he holds executive power, and the legislature is mostly controlled by Democrats. The judiciary also doesn't oppose the executive branch, so basically, his values are fully implemented. Currently, as for California, we can see that there's a huge gap between the rich and the poor, the finances are in the red, and there are still a lot of social issues like housing and the cost of living, and so on. As for now, Newsom's style is actually becoming more and more like Trump's. What do I mean? He posts a lot, like on X, sharing images and making statements in a similar style. This kind of style shows that, at present, right now, on the Republican side, there's Trump, and Trump has a lot of support. So now, people are looking for someone who can stand up to him, someone who seems like a strong figure. That's why Newsom has emerged. But as of now, it's still only the end of 2025, and 2028 is still a ways off. There's still 2 or 3 years to go, so in the end, the person who emerges might not necessarily be Newsom. But what we're hearing right now is that American politics is becoming more and more polarized. Whether it's the Democratic Party or the Republican Party, their appeals or the way they campaign is becoming more inflammatory and, relatively speaking, moving toward more extreme positions. So actually, going forward, we can see. So when will politics actually start to impact the economy and the markets? It's really just a matter of timing, a question of whether it happens sooner or later. But what we're seeing right now is that, well, at the moment, the market has basically finished reviewing the second quarter earnings reports, and then from October to November, the third quarter earnings reports will start coming out. Before that, in September, there's another chance for a rate cut. So as things stand right now, it looks like the market will be in a volatile bull market through the end of the year. Any pullbacks could present relatively good opportunities, so that's something everyone can keep in mind. Next, we're going to talk about a company since we just mentioned that Nvidia is doing well, and with Nvidia doing well, we can also think about companies involved in making chips, as well as those in the substrate, optical communication, and power supply sectors, should also perform well. So let's talk about one of these. One company that's also doing pretty well. Before we get into that, let's first take a look at how the market is changing. So right now, if you look at the S&P Wink with tongue sticking out 500 index, you can see that the overall structure of the S&P Wink with tongue sticking out 500 is relatively stable, and last week there was a noticeable increase. As for the Dow Jones Index, it's also doing okay, and in fact, the Dow has been performing relatively well compared to others. Next, let's take a look at the Nasdaq Index. Right now, tech stocks aren't performing as well as the Dow, but overall, they're still looking pretty good. Lastly, let's take a look at the Philadelphia Semiconductor Index. It's also been doing quite well. So at the moment, you can see that overall, the situation of a choppy bull market hasn't changed. Overall, that's still the case. The index continues to rise amid volatility. Although we see a lot of news trying to stir things up and influence the market, at present, all sides are still quite positive about the market. The bulls currently have relatively strong momentum. Now, let's take a look at the US dollar and US Treasury bonds. As for the current US dollar situation, you could say it's relatively weak. We'll have to see if this continues after things settle down. Looking at the 20-year US Treasury and the current situation, you can see that the yield on the 10-year Treasury is actually gradually trending downward. You could say there's a lot of volatility, but what we can observe is that, amid the fluctuations, the yield is getting lower and lower. Actually, if you look at the 2-year as well, it's the same situation. You can see that with this volatility, there's actually a clear trend of the fluctuations getting lower and lower, and with future rate cuts, this trend is likely to continue. Next, let's take a look at the stock we just mentioned, Intel. If we look at Intel over a longer period, say over a year, you can see that a significant change might be about to happen. You can see that at the beginning of this year, it once reached a relatively high point. But now, actually, that is, the US government is investing in Intel. This is good for American companies, in other words, for Intel, which has been hyped up. Its business has actually become relatively weak. So, there might be some short-term opportunities for Intel. But this wave of opportunity is short-term, not long-term, so if you're thinking about investing in Intel for the long run, that's not the case. Compared to other prospects, this one still looks promising. But in the short term, because the US government is investing and supporting it, it's basically like the government is providing a safety net for the market. So for Intel, this is a short-term situation, it's not going to last. Everyone can just keep an eye on it for now. Next, let's talk about what we just mentioned, Nvidia. Currently, Nvidia's own performance is still relatively stable. As for now, last Friday's closing also saw it pull back to the 20-day moving average. So for the next few days, we'll just be watching Nvidia's performance here. How will Nvidia perform early Thursday morning Taiwan time? Nvidia's stock trend should be pretty good, and the first thing to look at is whether its earnings estimates meet or exceed expectations. After that, the focus will be on its future business outlook, specifically, how it's doing in China and so on. The GB200, and also whether there are any new developments in areas like robotics for Nvidia's future prospects. Nvidia is also expected to launch a new robot brain today. We'll keep an eye on that, and if there are updates tomorrow, I'll share them with everyone. Alright, next let's talk briefly about a company, since we've seen Nvidia perform quite well. The GB200 will continue to ship, and actually, we've mentioned this company before, it's called Credo. If you look, last week when tech stocks took a noticeable dip, Credo also experienced a significant drop. After it dropped, it actually just stayed around here. In the past few days, it has rebounded, and right now, it's actually also. It's come up to the moving average here, and what's special about this company is that this year, its fiscal year is expected to end around the end of May. In its 2025 fiscal year, both its revenue and profit are projected to more than double, and its gross profit will also more than double. Its earnings will turn positive, and for the entire 2026 fiscal year. Reportedly, its implied profit will grow by about 90%. For this quarter, its earnings report will be released on September 3rd, and for this quarter, its revenue and gross profit are also expected to see triple-digit growth. As you can see, the company mainly does. These include optical components, optical chips, and active computers. As we just saw, scale-out skill-across means connecting different data centers, whether they're across cities or even countries, which requires a much stronger transmission system. But on the other hand, what we're seeing right now is that in the area of data centers, or let's say AI attributes, when it comes to investment topics, the demand for infrastructure is actually stronger than for applications. Because no matter what kind of operations you want to invest in, or what kind of capital expenditures you plan, most of your capital spending goes toward buying equipment or these basic components. As for what you end up producing with them, that's something for later. But when it comes to these things, there is real, concrete demand for this kind of basic infrastructure, and that's the current situation. So everyone can keep an eye on this stock. Right now, it actually hasn't broken its previous high yet, and September 3rd, which is next week, will be a time to watch and see if there are some opportunities coming up. Alright, next we'll take a look at the economic data that's going to be released today. Actually, today's economic data is pretty important. There are two main ones. The first is new home sales, and the next is the Dallas Fed manufacturing outlook. The new home sales data will be released at 10 o'clock. The Dallas Fed data will be released at 10:30. The expectation is that neither of these two data releases will have a significant impact on the market. So, what we can do is observe whether there are signs that the US economy is gradually slowing down, which actually ties back to the background we just discussed. In other words, for now, the A-shares market may continue to be a volatile bull market this year. The real question is, when will this bull market no longer be sustainable? That would be when the economic data truly turns negative, and the numbers can no longer make up for the relatively weak state of the economy. For example, if, possibly, the economy hasn't slowed down that quickly yet, it might be possible to slightly shift focus to those business performance figures. It's possible to make some adjustments. At the moment, we think this period could be extended for quite a while, so it's really about watching for when, at what point, the data starts to show some issues. At that stage, it becomes very difficult to gloss over the numbers. That's when the stock market could see a more significant, broad-based decline. But actually, as of now, even by this year's fourth quarter, or even next year's first quarter, such an opportunity probably still won't appear. So for now, we're just keeping these risks in mind and continuing to follow the market trends. At this point, it's actually pretty hard to see much happening. The chance for an increase is about 15 to 20%. Right now, the opportunities are relatively short-lived, and the market swings are quite large, so everyone can actually be more decisive about buying low and selling high. That way, it's relatively safer. Next, let's take a look at the current situation. It needs to go up a bit first to meet certain criteria. If we look at trading volume, at the moment, Ren-Tian stocks dipped a bit before the market opened, so there's a bit more risk there. The stocks in question are these. Stocks related to TAPI, and then quantum stocks. There were some noticeable fluctuations before the market opened, and both Tesla and Planet also dropped slightly. As for the stocks that are going up, on the upside, the main reason should be specific to individual stocks. The increase here is probably due to a merger or acquisition, so it's not the same as the others. The larger tech stocks are also falling, and it's pretty much the same situation here. So right now, the main focus is still on Nvidia's earnings report, because Nvidia's earnings are also. Taiwan will also release the report in the early hours of Thursday this week, so we can just wait a bit for that. If we look at the S&P Wink with tongue sticking out 500 itself, in terms of gains and losses, you can see that Intel is still at the top. As I just mentioned, Intel actually has a short-term opportunity right now. So you can use that as a reference. Next, let's take a look at the stocks that are declining. These are also due to factors specific to individual companies. The declines right now are mainly following the fluctuations in market sentiment. At the moment, market sentiment is still pretty much the same as it has been. There's a mix of bullish and bearish sentiment, so in this kind of mixed environment, we're seeing a choppy bull market. As for the declines, if we look at trading volume, you can see that right now, most of the tech stocks are showing pre-market declines, especially Nvidia and Tesla. And as I just mentioned, AMD, SMCI, as well as Apple, Microsoft, and Google. So at the moment, it looks like the market is making some adjustments, and Friday is likely to see a relatively optimistic sentiment. Because the market volatility has actually been relatively low these past few days, this week our main focus will be on the upcoming earnings reports. After the earnings are released, we'll provide a more detailed analysis and then look at what comes next. So next, we can also take a look at the following. How will the upcoming economic data develop? Since this week, by Friday, with the release of personal income and personal spending data, things will pretty much wrap up. After that, we'll be heading into the first week of September. And in the first week of September, there will be quite a lot of economic data coming out, such as the ISM PMI. But actually, the more important one is the ADP report, and then on September 5th, there will be a non-farm payrolls report, which is actually relatively important, because right now the market is focused on changes in the labor market. At this point, everyone is watching to see if the labor market will deteriorate further. If this trend continues, then the likelihood of rate cuts is basically certain in the end. It's just a question of how much they'll cut. There's a very high probability of a rate cut in September, but the real issue now is whether there's still room for further cuts after September. This is actually a topic everyone is concerned about at the moment. However, as long as interest rates or monetary policy don't become a negative factor for the market, this actually serves as a kind of safety net. The real question for market growth is how the current main theme AI will develop. So, for example, this week's upcoming earnings reports are also relatively important. After Nvidia's earnings, next week we'll also have Broadcom's earnings. We'll continue to keep everyone updated on these. That's all for today's group chat news. Hopefully, I'll have the chance to share with you all again tomorrow, most likely with a presentation. Thank you all for watching today.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.